Hi, and welcome to the Stock Scores Market Minutes for August 20th, 2018. In this week's edition, I'm going to talk about why it is important not to trust your gut when investing, as well as do my regular weekly market analysis and the trade of the week on JW Nordstrom. All right, don't trust your gut. You see, your gut instinct is heavily influenced by your heart. When we're trading, money's involved, and that means emotion is involved. And the market is designed to take advantage of emotion. What happens when there's a little bit of strength is we doubt it. And then as the strength gathers steam, we start to give it some credibility. And then finally, when the market is feeling really great and there's no doubt in your mind that it's going to go higher, well, it probably isn't going to go higher because you have let your emotions get involved. And the same happens on the downside. When the weakness first starts, we doubt it. And as it gathers momentum, we start to think a little bit about it. And when it really gets going, then we say, oh, the market's crashing and I need to sell everything I own. What's important is to not trust your gut, not trust your emotions, but instead trust data. The data will tell you what to do. All right, let's get into this week's market analysis, starting off with the chart of the S&P 500. SPY is the ETF, and we've been range bound in this sort of sideways range with runs up and down. We are now nearing the highs again. We had some weakness early in the week. We've come back to it, and we're essentially building a base underneath resistance. The question will be whether we can break through that resistance. It looks a little more obvious here when we look at the longer term chart of the SPY. There is that resistance level. We have optimism coming into it, but very little volatility over on the right side. You can see the height of the candle bodies is quite narrow, and that's really just the market being quiet for the summer and, condensing, consolidating underneath that resistance level. Moving along to the Russell 2000, you can also see it's been very quiet for the small cap market. If you like to trade the cheaper stocks, you don't need me to tell you that it's been a quiet summer. And you can see that volatility is compressing. We're trading sideways, but we're building an optimistic pattern. We can say that because the bottoms are rising from left to right. That means the buyers are gaining strength, and there will come a time when it tries to break out through resistance. And as long as this little upward trend line is intact, stay optimistic, but don't get too excited until you get the breakout through resistance. Onto the Canadian market, which has been very dull, I would say. We've had a lot of choppiness. You can see the choppiness in here. Some weakness early in the week. It's come back now and really remains in that downward sloping channel, but it's just a slight drift lower as this market also is stalling under resistance. We've got that resistance level. We've got optimism coming into it. Very little volatility over here. The market really just building a base, and ultimately you would expect that it can break out of this trading range, but until it does, don't get too aggressive on the buy side. On to the TSX Venture, which is the microcap stocks in Canada, and it remains in a downward trend, which means generally avoid this market. Not a lot going on. Pretty typical for the summer months. This market tends to quiet down in the spring, end of the spring, and go relatively quiet until October, November. So we should bottom soon. We're getting near that point, but for now, generally avoid that market. On to the Treasury Bond market, which of course is our proxy for interest rates. If this is going down, interest rates are going up, and it is biased to the downside, but trading without a lot of volatility, so interest rates not really a factor in the market right now. If we get a breakdown through here, interest rates are likely going to start to move higher in a rapid pace, or a more rapid pace than they have been. And if we break the downward trend line, well, then the market is taking the foot off the gas pedal on the interest rate raise expectation. On to the US dollar, which has been strong for a number of months, and you can see it tried to have some strength this week, hit a new high, but closed at the lows of the week, below the open for the week, and that is a bit of a bear sign short term. That will get a little bit of profit taking in the US dollar, like I said, in the very short term. However, as long as that upward trend line is intact, I'd basically remain a bull on the US dollar. Gold, well, of course, if US dollar is strong, I say it over and over again, US dollar is strong, gold is going to be weak. Gold was actually more weak this week then the US dollar was strong. It has gone through that important support zone that we've talked about in recent weeks, and it looks like now it's headed for the next area of support. I would continue to avoid gold and gold stocks. And on to oil, which has had some weakness of late, but it is now essentially retraced back to the upward trend line where it should hold. What we want to see is if this pullback line can be broken to the upside, or do we break that longer term upward trend line. If we break that longer term upward trend line, we may be destined for some more weakness in oil, but it's at the point where we should get a bounce. The probabilities are that we will get a bounce in oil. Keep an eye on that over the next week or two. And the final chart is that of the VIX, which of course is our proxy for fear. You can see little spikes in fear. We had one this week, early in the week, but it is quieted down yet again as we see this happen over and over again. Fear not really a factor in the market again. So bullish on both time frames for US stocks, bullish long-term Canadian, but neutral short-term as it grinds its way sideways. Bearish on both time frames for gold, long-term bullish for oil, but at a critical point, and neutral short-term. US stocks showed more uncertainty this week, but they were still supported by the buyers and keeping that trend up. Canadian stocks did find some buyers late in the week, but it remains in that quiet sideways range that we have seen for a number of weeks. Gold continues to suffer, and I think best avoided. It is getting close to the point where panic will set in and you will probably get a bounce. Why? Because that's what happens when people get emotional. Oil has retraced to its trend line where it should also bounce. And there was a brief jump in fear this week, but it was pretty short-lived. And we end the week without a lot of fear. All right, let's go on to the trade of the week. This was a day trade on JW Nordstrom on Friday. And what we look for is my stock scores action candle. That's the pink dot telling us something is going on. This stock trading a lot of volume on Friday, trading abnormally, and it did a nice steady grind higher as the day wore on, ending the day at a little better than 3RR. Well, I hope you've enjoyed this week's video. Make sure you click on that like button, hit the subscribe if you are not already subscribed, and most importantly, trade well.